Good morning, Djamel. Nice to see you again. How are you today?
Well, thank you. Good to be with you again.
Look, it's been a little while since we've had a chat in the middle of last year about commercial finance, but I thought our market conditions are such at the moment that with coming out of JobKeeper and certainly the market changing, that it'd be worthwhile to have a conversation today about cash flow and the impact on businesses. So tell us a little bit about what's going on and what you see in the market at the moment.
Certainly, and thank you. At present, what we're seeing is a lot of demand on commercial property owners, whether owner-operators or investors, asking for whether it's possible to refinance their facility for cash flow purposes. And that's happening a lot. The reality is that a lot of investors, for example, didn't receive rent for quite some time. And on the other hand, you've got the owner-operators. Business wasn't running for a good 6-7 months, and now that we're back to certain normality, we're certainly seeing a lot of businesses crying out for a relief in cash flow, particularly with their debts into their commercial properties.
And are there plenty of options for them at the moment?
Well, the options certainly are out there, and certainly not within the majors. The majors have got that old way of doing business where terms are fixed for 10 years, 15 years, short term for larger borrowings.
Yes.
And these businesses are seeking and trying to find other lenders that may refinance those facilities over a longer term to alleviate on the repayments. And yes, there are some lenders that are willing and happy to assist in this environment.
Yeah. Now tell us a bit about a couple of examples that you've come across in terms of some of your clients and how you've been able to help them.
Certainly, a business that is run from a commercial property, the borrowings are around the $700,000 mark. And the clients came to a point where they were finding the repayments to their bank were a little bit heavy on the cash flow. The $700,000 facility was set over a period of 10 years, I think, or something like that. Anyway, It was costing them in the vicinity of $7,500, $7,400 a month. So we were able to take that facility to another lender over a period of 25 years, and all of a sudden that $7,500 commitment a month turned to about $3,800 or thereabouts. From my memory, I think that the cash flow relief was about $38,000 a year in savings, and that means a lot to businesses. That cash flow could be utilized either for retaining employees, stock ordering, etc., and that means a lot to them, especially in this environment for survival purposes.
And how did your clients feel when you delivered that result to them?
Oh, look, it's a big relief because at the end of the day, whilst we are going through that recovery mode, businesses, a lot of businesses are no longer receiving JobKeeper, no longer receiving support from the government. And so therefore they are now on their own. And to literally reduce a debt, for example, from $7,500 a month to $3,800 a month, many are welcoming that with open arms. There's no doubt about that.
It's certainly hugely valuable for businesses to be able to operate for longer, more efficiently, take the pressure off them.
Well, that's correct. That is correct. As I said, the example that I just gave you before, a cash flow boost of $38,000 per annum means a lot. It means a lot to many businesses, and this is just on an average of $700K borrowings.
And Djamel, tell me how people can get in contact with you to explore their own individual circumstances.
Yeah, certainly. Look, they're welcome to either contact us at info@finmore.com.au or call me directly on 0401 16 2023. And this way we can have a chat to them. We can investigate what they have and what we can do, whether we're able to help now or put a plan together for the next 12 months to change their structures, because many, as you may be aware, have finished 2020 in a low turnovers, low profits, etc. And of course, most lenders, first thing they will ask for is our financials. However, solutions are out there. It is a forensic approach that we take with the clients, investigate, as I said, the position they're in at the moment, where they can be, and what do we have on hand to help them. And that also, of course, is studied carefully with the lenders, and many of the lenders that are prepared to help. The good thing is that some of them are taking a positive approach of looking at not just today's situation, but where the business was, we know where they are at the moment, and could they come back to where they were? And by taking that approach, many businesses have saved themselves, as I said, a lot of money and a relief. More to the point on their cash flow.
Fantastic, Djamel. Thanks very much for joining us today. Once again, there is lots of information, plenty of opportunities for clients to get in contact with you, and we'll be talking soon.
It's been a pleasure. Anytime, Demi.
Thanks, Djamel. Bye-bye.
Thank you.